What is up guys, GGFOREX here and welcome back to my channel. Now I guess you're wondering, George, why are you wearing a coat? That's because my office is like outside and it's cold in here and it's raining and it's miserable and winter's coming. But that's not the point. The point of this video is market structure. A lot of you guys in the group have been asking questions. Also, like when you join the group, I ask you questions like what do you struggle with the most, what do you want to learn the most, and one of those topics what was most common was market structure, how to read it, higher highs, higher lows, and really understanding what you should be looking for and not what you are looking for. This sounds confusing, so I'm going to draw it out. We're going old school. If you OGs remember of this channel, this little beauty, the whiteboard. What I'm going to do is I'm going to draw some examples on the board, and then I'm going to go find it in the charts. And I hope you've had a good day, because today is NFP Friday, non-farm payroll Friday. If you don't know what that is yet and you are in trading, Google it, because you really should know what it is, because it's probably going to be the most volatile time in the market that you're ever going to have. So if you can master NFP Fridays or Fed whatever days, high volume traffic or high volatility days, if you can master those days, you'll trade any day and you'll just crush and you'll just be laughing because you make money hand over fist. So far I am in UK 100 for 4.2% at the moment. Things are going well. Anyway, I'll show the charts later on. This is about market structure. What to look for. Should you be buying? Should you be selling? Where should you be buying? What you should look out for? And how to avoid the traps of the banks. Okay. We're getting straight into this. We ain't messing about today. Bang, bang, bang. We're getting stuff done. I always lost my teeth. Let's go. Okay. So, if you're going to be looking for buys, what do you need to be looking for buys? Obviously, higher highs. So we got higher lows. We can see this. We can. Higher lows, we got higher highs. Right, I'm guessing you're thinking, George, I already know this, bloody bloody blah. But I'm just going over the basics just in case you don't know, and then I'm going to be talking about the sexy stuff in a second, so bear with me. So then you want to be looking, oh, I want to be selling it, or what do you need to be looking for? Lower lows, lower highs. Alright, can you see that? Yes you can. Simple stuff, right? But what happened if you're in this situation, okay? This situation, let's talk about it. Okay? A lot of you be saying, look, it's broken structure, which it has, right? Which it has, you should be selling. Not necessarily. And this is where a lot of people get stopped out, or they just go, why was it doing that? It's broken structure. One, what you need to do is check two time frames higher than what you're comfortable doing. So for me, I check the 1 hour. This is my like action time frame, which is what I like to do. Sometimes the 30-minute. But then if I'm checking the 1 hour, then I'm going to check the 4 hour and the daily for market structure. And what am I looking for on market structure? Higher highs, higher lows, lower highs, weekly highs, weekly lows. So if the price is up here on the day, as in it's hit yesterday's daily high, is the price likely going to break it? I don't know. So you got to wait to see what price action does. If you see rejection to the downside from that daily high, then maybe, or that weekly high, then maybe you should be looking for shorts. But that's a different video altogether. This is purely about price action and market structure. So if price is making higher highs, higher lows, and then it makes a lower low, that doesn't necessarily mean we should be selling, because what we need to do is have patience. This could take a day or two, because if you're trading a 1 hour time frame, this could take a while. You need to see, because price can easily do that. So if you're selling, you think, oh, it's going to come across here, here's structure. What I'm going to do is I'm going to put my sell order here, and it's going to go down and hit my TP down here or here. Not necessarily the case, because it can go down, hit that, and then smash back up here and take out these highs here for cash, because there is cash up there. There's dollars, there's stacks, there's money there, there's money there, there's money there, there's money everywhere in this chart, which the banks like to eat and keep it all for themselves. So we need to wait, as traders, we need to have patience to see if price, getting more confusing now, isn't it? Is price, when it makes a lower low, gonna make a lower high? If it does make a lower high, then we can be looking for sales, because then we're confident, look, it's broken market structure, it's made a lower high, the trend is now reversing to the downside. Don't just assume because it's made a lower low, it could just be grabbing liquidity here, because there's money there. And the bank's gonna go, yoink, that's mine, I'm gonna use that money to then drive price up and then take this money up here. Okay guys, so don't just assume that price, just because it's made a lower low, is gonna make a lower high, because it might make a higher high. Because you don't know what the bank's going to do. Remember, you're trading against the banks. You're not trading against Billy Bob the millionaire, because he's nothing in this massive ocean of sharks. Okay, he's just a little jellyfish. All right, you are like plankton. You're like sea dust. Is sea dust even a thing? What's smaller than dust? Whatever that is, that's what you are in this ocean of deadly animals. Okay, and deadly animals are big sharks called the bankers, and they've got bigger pockets than you, and they hedge their funds and they can do whatever they want. You just need to stay away from the traps. Here's another trap. Let me clean the board. Now I know you're gonna love this one. I just know it. You'll be like, ah, he's lying. I'm not, because I guarantee you've experienced this before. Let's call it a range, shall we? So price is going up like that, making higher highs, then it's doing this, making a range. I guarantee most of you guys are gonna go, well, it wasn't an upwards trend, it's failed to make a higher high or a higher low. It's now hit this resistance. Yes, it is. It's a resistance line, right? Let's put our sell order in here, have a stop loss there and a take P there. Oh yeah, it's happened 2 times before, it's gonna work, innit? But what has happened when you put your sell order there? Price has gone boom, taking you out and your cash, because there's cash up here along with billions of others cash, and then price goes down and takes you out. Hey, bet you weren't thinking about that, were you? Same down here. People who thought that the market was in an upwards trend, let's say it's in an upwards trend on a high time frame as well, so your bias is for buys. What does the price do? Goes up, takes out the sellers, comes down, takes out the buyers. What you need to do, you need to wait for these manipulations to happen and then make a better assessment of when you should be buying or selling. Now let's go into the charts and see what the crack is. Knowledge bombs. I'm dropping this on a daily. Like, not really, I'm dropping this on the weekly. I need to make more videos a week. You want me to make more videos a week? Want me to bring back the whiteboard? Let me know in the comment box below. But without further ado, let's get into the charts. Oh, balancing, yes. Right guys, so we're in my screen. This is the trade I'm currently in at the moment. So, UK 100. I don't really recommend trading this kind of thing because it's kind of volatile, it moves a lot. If you don't really know what you're doing, it's kind of scary, and there'll be a lot of swings very quickly, and if you're unexperienced or if you're not really sure what the banks are doing, then you could get freaked out, leave trades too early, get in trades too early, and it's kind of like a mismatch, just scary stuff. So just leave the indices alone for a bit, and like commodities, and just concentrate on currencies. But yes, anywho, let's go through this. So we want to find high highs, high lows. Let's just find AUD USD on the side. Let's see what's going on. Let's see what the crack is. Right, here we go. This is it. It's gonna be cool. Trend lines. So we can see, look, high low. High low, high low, high low, right? You got the same up here for high highs. But I don't really want to clone all these, but let's just do it to prove a point that we are in technically an upwards trend if price was here. Okay? So high lows, high highs. Let's do one more. Okay, and then what do we get? We got a break of structure. Trend line. Break of structure. So this will be our structure. Price has broken that structure. So what do we want to do? We can't just assume, oh, we're going to make sales here, because what we want to do is make sure that price doesn't just shoot up after taking all that cash, because there is cash there. So let's just draw that on so I can show you. Okay, there's cash here, right? If you want to do it, there's cash there. Wherever there's lower lows, there's cash. Wherever there's higher highs, there's cash. Okay, and the banks want this cash. The banks want all the cash, right? There's cash up there as well. Okay, so what we want to do is make sure that price doesn't get higher. Oh, that's it. Doesn't get higher than our higher high. Okay, so it's broken the previous low, which is indicating a sell, but to confirm it and not rush ahead is make sure that it doesn't make a higher high. So if price then makes a higher high, then it's no longer a downwards trend. But if price comes to about this area and then makes another lower low, then we can say, okay, the trend has reversed. It is now making lower lows, lower highs. I should be looking for sells. Does that kind of make sense? So that's kind of like wrapping it up unbelievably quickly. Just doing there, marking out your higher highs, higher lows. Highly recommend you do that. Just practice. Understand what you're seeing. It's not just up and down in the charts. It's kind of like a language, okay? You see it, higher highs, higher lows. Okay, the banks are going from here, to there, to there. Where's it going to go next? Where's it going to retrace back to? Okay, get your Fibonacci out. Watch your Fibonacci numbers. If you want me to make a video on Fibonacci's, which I probably will do, but if you want to know faster, then just let me know in the comment box below and I'll make that for you. Because the 50 on the Fibonacci, the 0.61 isn't actually great. Okay, that's kind of what everyone does, and the banks knows what everyone does, and the banks take everyone out. Hence why the failure rate of everyone trading is 96%. So why would you trade like everyone else? Boom! Knowledge bomb right there. You're kind of like going, God damn, George, what are you doing? Right, let's see if I can find a range on this as well. Okay, well, you're going to use this. We're going to use a tiny little range here. So, what do we see? Well, I'm going to draw it on so we can see. So what we got here, we got what you would class as, imagine this doesn't happen, right? This doesn't exist yet. We have technically a range. So what happens? You're in here, you think, oh, because we've broken a previous low, it's made a lower high, maybe we should start looking for sales, which is what makes sense, right? So you're in it, you put your sell limit here. Let's get another one in, let's get it all Gucci. Let's say you put your sell limit here when it hits the top of the range, which I will make blue. And let's say you put your stop loss at the highest wick, previous wick, which is what most people would do because you're going with structure, which is what you're taught to do. Okay. Let's say you put your stop loss there, and then you want to take your TP, I don't know, down here somewhere. Get a nice reward to risk. Let's have it down here, why not? There's the previous lows. That is fat stacks right there. You're talking bank. So let's just make this red and let's make our TP green. So that's what you're thinking. You're predicting it, you're reading the market, you're making, it's going high highs. No, it's not. It's making high highs, high lows, then it made a lower low, broken structure, made a lower high. So you're thinking, right, the sell is on. You found your sell limit, we've got some resistance. You're thinking yes, and then what happens as price goes on, bang, you get stopped out, and then the banks push the price down into where you're thinking price was going to go anyway. You end up with rage, and then things don't make sense. So what is the point of this video? Understanding market structure, where's it going, so you understand your bias, and then being patient to see the manipulation. After manipulation, get in. Don't try and get in beforehand. It will be very difficult, and your stop loss will have to be really high because you don't really know how high they're going to go. They might only go a little bit higher than usual, or they might completely smash everything out. You don't know what they want to do because they are the banks, they've got the cash, they've got the power to do so. So you really want to wait for the manipulation to happen, the sweep of the highs or the sweep of lows, and then get in. So guys, that is market structure. That's how I play it. So far things are going okay. I have had a few bad days. I've had a very bad month. Last month was terrible. I mean, have a look at this. This is shocking. It's hurt me a lot, but I've learnt a lot, and it's all about a learning process. This is still a demo account. You're not going to go into Forex and just nail it straight away. It's going to take you months and months and months of tweaking, understanding the markets, what days in a month to trade, what weeks in a month to trade, what months of the year to trade, what happens in particular months. September is a scary month. It's full of news. A lot of quarters happen. A lot of figures get released, quarterly figures. So like, it's massive news. It's understanding how to trade with the news, how to follow the bank movements, and all of that stuff just takes time to learn and master, and having discipline to stay in your trades or get out your trades. Trust in the process. All of that is what makes you lose, but you need to learn it, understand it, combat it, and it's just trial and error game. That is purely it, and it's all a numbers game. So if your reward to risk is good enough, you can afford to lose. Simple as that. If you lose 6 but you get reward to risk of 1 to 6 at 2%, you make 12%. So you see what I mean? So if you're going to lose 3 trades in a row and you're down, let's say 2% a trade, so you're down 6%, but then if you do 1 trade at 1 to 6, you're up 6%, so you're still 6% in profit, but you've lost 3-1-1. You see what I mean? It's all about a numbers game. I hope you found this video helpful. I hope you found it educational. I hope you found it informative, because that's what I want to happen. I want you guys to understand what you need to look for, what you need to be wary of in certain situations. Okay, so guys, without further ado, I don't know why I said that. I will leave you to it. I'll be back with you as soon as possible. If you have any questions, let me know in the comment box below. If you haven't already, join the GGFOREX family. If you want smart charts, you can get it exclusively with the GGFOREX family, because I somehow got the deal of a lifetime and got 75% off for you guys only. So if you want that, it's in the group. I'll see you there, because I make loads of different videos on there separately to YouTube as well. So guys, hit the link. I'll see you there. I'm going to go now. Have a great weekend and stay safe.